Hello and welcome to the Philippine Market Wrap. In this podcast, we break down the developments of the Philippine global markets from the perspective of the Japanese investor in a clear and practical way. Today, we are looking at the Philippine stock market on December 12, 2025, the day after the Bangko Sentral Filipino, or BSP, delivered a 25 basis point rate cut. Let's take a look at how the market reacted. First, the stock market. On December 12, the Philippine Stock Exchange Index, or PSEi, rose by 0.78%, closing at 6,036.72 points. The index reclaimed the psychologically important 6,000 level, and overall, the market reaction was quite straightforward. Lower interest rates were clearly seen as positive for equities. Looking at the sector performance, mining and oil, property, financials, and industrials all posted gains, meaning that almost all major sectors have moved higher. In particular, property and financial stocks, which tend to benefit from the lower interest rate, stood out during the session. However, the picture was different in the foreign exchange market. On the same day, the Philippine peso weakened to 59.06 against the US dollar. While a rate cut is generally supportive for domestic economy activity from the perspective of foreign investors, it also means that the relative attractiveness of local interest rates declined. As a result, we saw the situation where equities moved higher while the currency came under the mild pressure, both happening at the same time. This kind of market reaction is actually quite typical during the easing cycle. Just because stock indices are rising, it does not necessarily mean that the overall economy is improving in a single uniform direction. Especially in emerging markets like the Philippines, it is important to look at three factors together: interest rates, stock prices, and exchange rate. In addition, political and policy stability also play an important role, particularly from a medium to long term investment perspective. To summarize today's key points, following the BSP rate cut, the PSEi moved back above 6,000. Most sectors performed well, with property and financial stocks leading the gains. At the same time, the peso weakened slightly into the 59 range. This session once again highlighted that rate cuts are not a universal solution and that their impact can differ across markets and asset classes. A written version of this commentary is available in Japanese on Note and in English on the PinChuTV blog. Links are provided in the show notes if you would like to read more. Thank you for listening, and I'll see you in the next episode of the Philippine Market Wrap. Salamat kayo, Amping.